Hey everyone, welcome back to our channel where we discuss all things investing. In this video, we will show you how to use simple technical analysis to make investment decisions. Technical analysis is a method of analyzing financial markets that relies on chart patterns and indicators to identify potential trading opportunities. First, let's start with chart patterns. Chart patterns are visual representations of a stock's price movement over time. They can be used to identify trends and potential reversals in the market. One of the most common chart patterns is the head and shoulders pattern. This pattern forms when a stock's price rises to a peak and then falls to a trough before rising again to a second, higher peak. The second peak is usually lower than the first and forms the head of the pattern. The two troughs on either side form the shoulders. If the price falls below the neckline of the pattern, it's a sign that the stock is likely to continue falling. Next, let's talk about indicators. Indicators are mathematical calculations based on a stock's price and/or volume. They can be used to confirm trends, identify overbought or oversold conditions, and generate buy and sell signals. One popular indicator is the Relative Strength Index, RSI. The RSI measures the strength of a stock's price action by comparing the average gains and losses over a set period of time. If the RSI is above 70, it's a sign that the stock is overbought and may be due for a correction. If the RSI is below 30, it's a sign that the stock is oversold and may be due for a rebound. Another indicator that traders use is moving averages. A moving average is a line that plots the average price of a stock over a certain period of time. A simple moving average, SMA, is calculated by adding up the closing prices over a set number of days and then dividing by that number of days. Traders use moving averages to identify trends and potential support and resistance levels. For example, if the price of a stock is consistently trading above its 50-day moving average, it's a sign that the stock is in an uptrend. So, those were just a few examples of the many indicators that traders use in technical analysis. Remember that technical analysis is just one tool in your investment toolbox, and it should be used in conjunction with other methods of analysis, such as fundamental analysis. If you're new to technical analysis, I recommend starting with a few basic indicators and then gradually adding more as you become more comfortable. With a little practice and patience, you can become a successful technical analyst and make informed investment decisions. Thanks for watching, and we will see you in the next video.